Last video today, and hopefully, the other videos were useful and they're quite insightful. This one is it's like the magnum opus of what we've achieved so far in QDB. It doesn't look that amazing, but what it does is particularly EA for MetaTrader 4. It checks your Google Sheet, so the one that you subscribe to on Patreon, it connects to that sheet. It connects to the main sheet, which has all that sentiment data. Right, so that takes care of the sentiment. So we know we can come to this, for example. So we've got the sentiment taken care of. And what it does for the technical, it checks a thing called triple EMA filtering. So it checks whether or not we're trending higher or we're trending lower technically. Now the piece de la resistance is the fundamental aspect. Now this is the new part. Now what it does, it's really clever. What it does, it checks your S&P and it takes snapshots of its performance on the day. So if we've moved 10% higher on the day, then that would be considered a 0.1%, sorry, not 10%, a 0.1% move on the day. If we moved higher, that would be risk on in speech marks. If we drop 0.1, then that would be considered risk off. So it's very responsive to moves. We can see dollar yen is pumping, but what we want to do is look at the US 500 and zoom in, change it to candlesticks and see what's happened. So because we're pumped, because we're going to probably continue pumping, what's going to happen is that when we have risk on trades, they'll be allowed through. It's basically like a gatekeeper. Now you might question, why have we got this pound Kiwi? Because you'd want to be buying that for risk off. That triggered when we were doing this. So we may want to change the threshold from 0.1 to something like 0.3 move on the S&P, because we could get caught on thinking that we're being risk off with a 0.1 move. We can definitely change it in the code, and there's the S&P. So what will happen if we continue moving higher, then things like the Aussie yen will be allowed through. Okay, now if we move lower, that wouldn't be allowed through. If we were looking for, if the sheet said buy, it would be like, well, no, because the S&P is falling, we're not going to buy the Aussie yen. So if we come to the code, and we've given the currencies a individual score, and because of the FX pairing, we've then got a calculation between the two currencies. So Aussie is +3, where yen is riskier, obviously. Aussie is riskier than the yen, so we've got the 3, and then we took the -3, so we've got a difference across its neutral value, which then gives us a risk paired value of Aussie yen having a value of 6. Now that would be, if we risk on like this, it would give it the green light for a long. So it's really clever, and what it does, it calculates. So say for example, pound Swiss comes through, and a risk on, and it's a long, then it'll be like, yeah, that's fine, because the pound is riskier than the Swiss. So therefore, that would give it the green light. It would be a thumbs up. The only trouble is the S&P. We can see we are sort of trending lower on the small time frame, but we've got to remember that if we zoom out massively, then we're definitely we're well bullish. And so I mean we probably should be coming up higher, because we do have to zoom out, don't we? So so basically that's it. It takes a snapshot every 15 minutes, compares it where it was to where it is now. And if we're positive, then we're risk on. So it looks like we are positive. So when we get the change in the sheet and the herd move, and then it agrees with the fundamental, and it agrees with the technical, in so much that we're trending higher, then it will give it the trade go ahead. Now this may be going to stop loss, because what had happened is that we triggered it when the S&P was falling. And it's so much is that this is so sensitive to risk on or flows, it's probably going to follow what the S&P does. So it's not necessarily even what this particular currency pair combination is. It's just going to track risk appetite. And this is why this is really, really, really important. And you probably could argue is maybe the most important of all three. And of course, we have to add risk management in here as well. But it's just a, it's like a summary. If you break one of these legs, it's going to fall over. But yeah, the fundamental aspect is governed in this EA by the S&P on taking its snapshots, which is really, really clever. And unfortunately, we may be getting stop loss because we just entered at the wrong time, where it was risk off at that point. So what I may do is that we have a little check there. So we probably want to see a larger move in those 15 minutes, because that 0.1, it can move up and down. Like for example, this is a 0.1, easy, and then we might have got trapped to this risk off trade. Okay, now we're clearly reversed to the upside, so we're risk on, and so it should allow those risk on currency pairs. So I think what we might need to do is keep that a little bit more flexible, less tight. So I'm going to save that and compile. And no warning. So what it will do, the S&P must move 0.2 in a 15-minute time frame. If it does, then that's good for risk. Okay, risk on. If we move higher, risk off. We move lower. All right, that's changed that, so it doesn't need to be changed. But that's it. So each pair has got its score. We're taking snapshots every 15 minutes, which is your risk engine delta, which is really amazing. And we've got checks and things like that, and the experts log will tell you information. For example, we are risk on, but this particular currency pair is a risk off pair, so we won't allow it. And so therefore, that would have come into the equation here. We probably shouldn't have triggered it at that point. We triggered it at 11 o'clock. Here on that move. It's cruel, isn't it? It's really, really cruel. This move here was a sufficient move. So we do need to widen that threshold, because we can easily do a tiny little retracement like this and then do that. So that's what we're going to do. This is going to go to SL, pretty sure of, and then it's just a lessons learned, and we just basically doubled the threshold up here. And so that's fine. If we have a massive pump, that'd be good, because then then it'll allow those risk on trades to come through, like the Aussie and the Kiwi. And ChatGPT weighs the pound the same as CAD, and it weighs the yen the same as Swiss, and the euro's got a neutral value. But I'm not going to argue with ChatGPT. That's what it said, so I'm just going to stick with that. It makes sense, doesn't it? The euro is fairly stable nowadays, so it's got a neutral value, and that's it. So just a video there. This probably will go to stop loss, but at least you understand why, because it really moves with risk appetite. It isn't even so much of the technical, well, it is to do with the technical, but it's really to do with fundamentals on the majority. If we move higher, this should drop, because the New Zealand dollar is riskier. This would be a risk off pair. So, if we're going to be risk on, this would fall. This is why this is in drawdown. Okay, so you have to remember that part here and how the currency pairs work in a fundamental backdrop. Okay, so it's not easy, but with this EA, it takes care of all three factors, and so it should be absolutely amazing. But it will just be a case of just having to fine tune the code. And maybe the S&P drops here. If it does, you'll probably find out this starts going into profit. And that's how whimsical these tricky currency pairs are, such as the Euro Aussie and things like that. So we see what happens. If this falls, this is going to go well. And if it goes up, this is going to go to stop loss, because it's linked to risk appetite, hence this part here. Okay, so little bit of education tutorial stuff and an overview of what we've managed to achieve. And it's basically an all-encompassing, super intelligent EA that takes into account fundamentals, S&P, risk on, risk off, sentiment, are they going long or short, and a technical by checking your trend by EMA filtering, and that's it. So that's it. Unless you've got any questions, let me know. And if you don't understand the correlation of a risky pair and why it moves against S&P, then I know Baby Pips has got some stuff on their website, and that should help as well. So yeah, we'll just see if this goes up higher. This is going to go to stop loss basically. If it falls, we'll probably go into profit. Right? So that's the nature and of the FX pairs on the risky currency pair side of things, and that's it. So any questions, let me know, and I'll keep you guys updated. And all these signals are going to come into Telegram, into here. Okay, and like I say, this is likely. Hence my monkey emoji, because we're probably going to pump on risk, and if we do, this is going to go to stop loss. So we'll have to wait and see. So hopefully it helps. Any questions, let me know, and I'll speak to you guys soon.